In today's session, here's what we're going to talk about. Got a few subjects. One, we are going to talk about the VS1 levels, right? So the amazing little indicator that Anthony provided for us. We're going to talk about the VS1 levels. I had a question about how to use them or what to use them for. We're going to talk a little FTB strategy today as well. We're going to talk a little bit about strategy shifting. I had a question from a trader who basically was noticing opportunities in the market, but couldn't take advantage of them. And we're going to talk a little bit about how that's okay, but how also you can think about shifting your strategy. And I guess we're going to start things off by talking a little bit about the new legislation. Got a question about the new leverage rules that are coming in to the European Union. Have any of you guys heard about that? I believe I'm not too caught up on that because it doesn't affect me personally, and I only care about what affects me. But I believe it's starting July 1st. And essentially, right, this is what it is, right? Essentially, they're rolling out some new proposals, new regulations when it comes to trading Forex and other markets as well. We're going to concentrate on Forex mainly here. And they have to do with two main things. One is leverage, and the other main thing is there's a little bit about hedging for options traders out there. Again, this is Forex. It's not a little bit different. But one is leverage, and another one is negative balance protection. And with the leverage, what's happening is they're adjusting the leverage, restricting it to, I believe, a 30-to-1 maximum. And I think it's going to be different between major pairs and minor pairs. I think minor pairs may go 20-to-1. Again, different markets. Binaries may go something else. But I believe the maximum is about 30-to-1. And initially, a lot of traders are freaking out, right? Have any of you guys heard this and you're worried? We went through this in the U.S. Back in 2010, I want to say. 11? Somewhere around there. So I know exactly what you're thinking. Is anyone kind of freaking out over this or worried, concerned, confused, going crazy? Nope. Good. You shouldn't. Because I'll tell you this. Do you know what it means for you? And I say this to specifically the group of traders that we're working with. It means absolutely nothing. Yes, if anything, it means positive, as Jason Grayson just wrote in Protection. It means absolutely nothing, right? And while a lot of traders are shocked and scared because I believe what you guys had up to like 500-to-1, right? 500-to-1, 100-to-1 leverage was pretty common. And now that's being reduced to 30-to-1. And here's the thing. And this is the answer I give to any trader that asked me about what type of leverage should I use, like comparing brokers and whatnot. Do you know why it means absolutely nothing? Because if you are trading smart, you are never using 500-to-1 leverage. You are never using your 100-to-1 leverage. The only people using that type of leverage are the people that are trading ridiculous position sizing, overexposing themselves to the market, looking to create really quick get-rich gains, and most of those people end up going broke anyway. Lottery winners, as Jason Greystone said. Lottery winners, right? Unless you're one of those traders that wants to create that 100% return a month and brag to your friends with the latest Instagram post, it doesn't really mean anything, right? If you're using correct position size, what do you always hear in the industry, right? Never risk more than 2% of your account, right? You guys heard that? Some people will say never risk 3%. All right, if you're abiding by those rules, this is not a problem. Because you are never using that extra leverage anyway. So in my opinion, it shouldn't affect you unless you are a wild, reckless gambler. And I don't think you guys are. Because wild, reckless gamblers don't invest their money in education. They save it all for the market. But that is one of the things to it. A benefit to it, or I guess a negative would be it limits the amount that you can trade and make, and limits the amount you can lose, which no one wants to talk about. So it's really protection for you. But it also helps to eliminate some of the scammy brokers. A lot of brokers out there, a lot of scammy brokers out there, and a lot of these brokers kind of promote themselves with the massive amount of leverage that they can provide you and the massive amount of returns that their clients have gained, right? You know, oh, we've had clients gain 1,000% and blah, 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 using this 5,000 to 1 leverage. It's going to eliminate some of those, which is a positive thing in my opinion. It's going to help kind of shine light on the better brokers or the more realistic brokers, right? So that's the leverage thing. Again, it shouldn't make any difference. And I saw this in the US because I was freaking out as well. We went from 100 to 1 to 50 to 1. And the same thing, it was a big uproar. Everyone was talking about it. We were scared and like, oh my gosh, how am I ever going to make money? And then when I realized that things changed and literally nothing changed in my day-to-day trading, I forgot all about it. I forgot we even made the change. Because I was a smart trader and I was never using 100 to 1 my full leverage anyway. So for us, it shouldn't affect us. For you guys out there that are gamblers and reckless and you're looking for that get rich quick program, it is going to affect you. And it's probably going to save you from yourself because in all honesty, right, if you're using that much leverage, you're probably going to go broke really, really, really fast. So now what it does is it slows down the bleeding. Instead of you blowing your account really fast, now you're just going to have a slower bleed. You'll still blow your account because that's what reckless traders do. But now it'll be at a much slower rate and hopefully provide you with an opportunity to see the light and save yourself before you blow everything. Speaking of blowing everything, another change that's being made is the negative balance rules. And this is going to help this is going to help with you owing money to your broker. Were any of you guys trading during the, what are they calling it? The SN bomb, the Swiss National Bank bomb, where they pulled the floor underneath the dollar Swiss, right? For the longest time, I think it was $1.13. They were saying, we will not let the dollar Swiss, let me bring up a chart for you. We will not let the euro Swiss trade below $1.13, something like that. And of course, when you do that blatant manipulation, right? You do that blatant manipulation and traders are smart, right? If someone tells you, right, if a national bank comes out $1.20, if a national bank comes out and says, we're not going to let this trade under $1.20, what do you do every time it hits $1.20? You buy, right? You buy. Why? Because they're saying that they won't let it trade under $1.20. I'm not even gonna be able to get a chart up here without it looking weird. But here's your $1.20 right here. All right? So traders are playing this game, right? Every time we get close to $1.20, buy, 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 buy. Boom, 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 boom. And then one day they came out and said, whatever, we don't care anymore. Woof, pulled the carpet. They pulled the carpet, right? Every trader is standing over this big sinkhole. And know what they did? They said, let's pull the carpet. Woof. And you can see this right here. Whap. The SN bomb. Boom. Free falling. I was actually in a trade on another pair, pound Swiss. I think Jason Greystone might have been in the same trade. But I just got stopped out before it rolled over, before it fell down like a million pips. I know I was in a trade that got stopped out right before. I was in a bullish trade. So it got stopped out to the upside before it fell to the downside. And I was like, 10 pips away from waking up with a massive profit in my account. Because you can imagine the slippage that takes place, right? This is another thing with stops. You all realize that your stop loss doesn't guarantee you to get out at that place. Does anyone not realize that? Your stop loss does not, in a demo account it does. In real trading, your stop loss does not mean that you will get out at that level, right? Is that new to anybody? Or were you aware of that? Okay, yeah. Your stop loss is essentially it's a waiting place in line. Same thing with orders. That's why we see slippage, right? When you put a stop loss on or any type of order on, right, it's basically you telling your broker that, hey, this is where I would like to get out at, right? And your little waiting place in line goes below everyone else that's in line, right? And this is entry, stops, and targets, all three of them, right? They're waiting places. Any type of limit stop order, they're waiting places in line. So they're saying, hey, broker, I'd like to get out right here if the market comes down, right? And usually when the market comes down, right, the broker has no problem executing your order, right? Maybe you have, let's just say, imagine you're not in line. There's 50 people in front of you. Those 50 orders get executed quick. You're 51, boom, you're out while the market stays at that level. No big deal. However, yeah, you maybe get a little bit of slippage, right? Maybe you get out for a pip lower. Maybe you get out for a pip higher. Who knows? However, when the market moves this quickly, by the time your order is processed, right? If your stop is right here, and I wasn't awake for this live, but it was a matter of seconds, right? If your stop loss is right here, and by the time your order is executed, if price is down here, guess where your loss is at? Yeah, your loss is a lot lower. Now, again, same thing for people that were selling, right? I had traders I worked with that were in this trade because of, or maybe not this trade, but a different trade because of the trade that we were in at the time, where they were supposed to get out for their profit target was 20 pips, and they ended up making 200 pips because of slippage. So same thing. Same thing. You can have positive slippage as well. And you see this to a minor degree with news events intraday. But just realize that. So what happened was a lot of people got slipped a lot of money. A lot of people, their accounts went into the negative, and guess what they got? They got a bill. They got a bill saying, hey, you lost everything in your account, and now you owe us this because we gave you this loan, and you lost more than what you were loaned. So, relent, now you owe us money. So it looks like they're going to put in a negative balance protection to help against stuff like this. I guess you can say Brexit was a similar one, or the fat finger slip that happened in the pound dollar a couple years ago. And the brokers are going to be required to have negative balance protection. I think that's going to affect your margin call a little bit. I think there's going to be a higher level for margin call. I'm not too keen on those details. I think there's going to be a higher level for when you would get margin calls, basically when they shut you off. But there is going to be protection, so you will not go into negative balance. Or if you do, I think you're going to be covered on that. Aside from that, there's going to be some rules about hedging for binary options. Again, I'm not an options trader, so I didn't look too deeply into them. But those are the two main things that these new regulations are going to affect. It's going to affect the negative balance protection. It's going to affect your leverage. The way I see it, although people are freaking out, these are actually positives. It's protecting you from yourself, in my opinion.